Good morning. It's the Cottage Country Insider Podcast. This is episode 3. This morning we have mortgage expert Samantha Garrod coming in for the podcast. Good morning, Samantha. How are you doing today?
Hi, Jim. Good. How are you?
Good. It's a nice sunny day. I think every day I've done these podcasts, it's been sunny, so it's
I know
nice.
it's beautiful out. Very
Good.
spring weather.
Yeah, absolutely. And it's nice when spring comes a little early in the season. So you don't
Yes.
April to get it. So
Yeah,
how just to start off, how busy are you right now, say, compared to a year ago?
Compared to a year ago, I would say probably like 60% of what we were doing last year. So it's a little bit slower, which is kind of, on trend with what we're usually at this time of year. Now the past 2 weeks to a month have definitely started to pick up though. People getting pre-approvals for spring, and we've seen a lot more coming on the market. So it's definitely starting to pick up into the spring market.
Now, 2023 is a much different year than 2022 was. If viewers aren't aware of what interest rates and some of the mortgage rules, what kind of the key differences between March 2023 compared to March 2022?
Yes. So I did the math this morning, and this year compared to last year, our Bank of Canada's prime rate has gone up by 4.25%, which is obviously, massive. So that's probably the main thing that everyone's talking about, is just interest rates going up compared to last year to now, as well as just I would say that, and you would know this better than I, but just the influx of buyers just wanting to overpay for houses and just wanting to get in because of those low interest rates. That kind of has subsided a little bit, we've noticed.
Yeah. Are people doing different? I was reading an article in the Globe Mail on the weekend, and something with new mortgages coming through. I think it was the second half of 2022. People are, because of affordability issues, they're amortizing them over longer periods of time as opposed to just the normal 25-year. Are you seeing that?
Not overly, because we do 30-year amortizations anyways, pretty regularly on anything over 20% purchase or 20% down payment for a purchase or like a refinance. That just kind of helps the buyers just with, lower payments. We do have options for 35-year or 40-year amortizations, but I personally never do those programs, just because those are something you would use in an extenuating circumstance, not on a regular basis. So I personally haven't seen that, but I have heard of, people wanting to just push those out because of their payments going up.
One of the things, I was just at an office meeting this morning, we were talking about people porting mortgages over. So they find the house that they like right now. They've got one of those really sweet 2021 mortgages up 1.8%. Is it possible, if they want to, and say the pricing is comparable, they have a $500,000 house, they're buying a 7. Is it possible to port those really cheap mortgages? Or the banks kind of saying no?
Yeah, it depends on your lender and how your original mortgage was set up, but usually you can port it. Where they get you is if you need more money. So if you need more money, they'll do what they call a blend and extend. So you won't actually get that true 1.8. You'll get, something in the middle of what is available now and that 1.8 because of those extra funds.
So it doesn't really matter whether you have a closed or open mortgage, whether you're doing that?
No, those are usually open mortgages, often come with higher interest rates. So they're usually closed mortgages anyways. So yeah, you can usually blend with any mortgage as long as it was set up properly.
And then you're just blending it over.
Yeah, exactly.
So if you're a house, if we're looking, and we deal with a lot, and you deal with a lot of first-time buyers that aren't really used to the mortgage process and what interest rates are, what amortizations, terms of mortgages, how do you start people off when they come to you and say, well, I want to buy a house? What's your process?
Oftentimes they have a lot of questions. So I do like to ask them right off the hop, do you have any questions for me to start us off? And then that usually kind of gives me a good idea of where they're sitting in their knowledge base, so that I can use different terminology with each client. But then generally speaking, how I explain it is, often people have a lot of questions about the stress test. So I often explain it I basically have to qualify you at 2% higher than what your contract rate is going to be. So that's really what has been affected mainly, especially for those first time home buyers. So they qualify for less and everything like that. But I just try to walk them through it step by step and, hold their hand as much as I can, because it is a scary time. And I remember when I first bought my first house, I was even in the industry and I was still scared. So I just try to, walk them through it and answer any questions and just use non-scary language. It's not like something that somebody will understand that's not in the industry, if that makes sense.
Yeah, and always reduce it down so a grade 7 student or 12-year-old can understand.
Exactly. Anyone can understand, so they don't feel bombarded with information that they don't quite, grasp. So
Yeah, when we're talking to first-time buyers, when there's a lot of young people that have been getting in the market the last 3 years, we have some of those difficult discussions at the beginning before we refer them off to a mortgage professional like yourself, just to kind of give them, to a pre-qualification.
Yeah, exactly.
And you ask questions like, "Have you been bankrupt?" Like,
yes,
big one.
It's a huge one, and what I'm noticing now post-COVID actually is a lot of separation and divorces. So that has taken a huge hit, especially if you pay child support or spousal support, because that is a payment we have to include on your application. So those are really tough questions that you have to ask. So that's kind of why I like to start off the conversations really light and airy, and just they tend to just tell you about their life, right? So you kind of pick pieces of what to ask for and, things to make note of to ask further.
If you're going to give first-time buyers a bit of advice, and if they start looking for houses, like, one bit, what advice would you give them? Because I know what mine is. I'll say mine after you say yours.
Okay. I have two. Can I say two?
Okay. Yeah, absolutely.
So oftentimes it's down payment and credit that we see with first-time home buyers, because they've never been taught. And I always say this needs to be a high school course. You need to learn how to manage all of these things for future. But if I could speak to, 18, 19, 20-year-olds, I would say start saving, even if it's like $25 a week or $50 a week. Just put it somewhere where you don't see it, either in a tax-free savings account or an RSP account, and just make that a weekly withdrawal, so that $50 or $25 is just gone. And it just sits there, so that, it's in one account. It's not moving around. You're not having one account here, one account there, and you're saving for your down payment, because it does cost a lot more than what people generally think it's going to cost to buy a house. And then in terms of credit, I would say you need it. So get yourself a credit card or two, at least two, I would say, and pay it. Don't use it for, buying that vacation that you can't afford or whatever. Just put your gas on it, put your groceries on it, and then pay it off, so that you're establishing that credit young, so that when it does come time to buy a house, there's no questions on credit.
Good.
So those are my two.
My one is, once you've bought a house and be pre-approved, don't go big. Don't make a big purchase. Don't go buy that F-150 electric truck, because I said that's going to euchre you for your mortgage.
Yes. Yeah.
Like, we tell them right out, like, don't do anything like that.
I feel like you and I could probably just sit here all day and just rhyme off things not to do when trying to buy a house, because
we'd be here for 3 hours.
Yeah, exactly. But yeah, definitely, like, major car payments are absolutely huge. So yeah, don't do that either. And don't co-sign on anybody's loan or vehicle ever, because just don't do it unless you're married.
And if you're buying a car, I'm trading in my car, and I was just saying at our office, we're talking about it. I got a price on it in May.
Yeah.
Last year at a trade, and I got a price in June this year. The price this year in June is almost half of what it was last May.
I believe that.
Yeah. So 65,000 last May, 32,000 January. So you're looking to buy a used car. There's going to be amazing deals out there for used cars. Why buy a new one?
Well, especially because I feel like people bought a lot of new shiny things during COVID, like boats and trailers and all these types of things. And I feel like this is the year where they're going to come back, because people, can no longer afford it, or they're making different choices. And I think this will be a good year to buy used things. So yeah.
Yep.
Yeah.
Yeah. Oh, absolutely. So
Yeah.
if you're a first time buyer, we're kind of just going to work through the first time buyers a bit here before we
Yeah.
move to other things. But what type of mortgages are available on the market, and what's probably the best suited mortgage if you're a 30 something young couple looking to buy your first house?
So for a lot of first time home buyers, we do what's called an insured mortgage, which is when you put less than 20% down. So the benefits to that are they often come with rate promos. So the rates are often lower than, say a conventional mortgage where you put down 20% or more.
There we go.
The wonderful thing about the internet. That's fine.
My
You know
internet is not great at our office either. So
we will edit that minute and a half of dead airspace, so that's fine. We're not doing this live, of course, so we're able to make those edits. So we'll get back. You're talking about rates for first time buyers and insured mortgages.
yes. So
Or insured mortgage. Yeah, insured mortgages. Sorry.
Yeah. So insured mortgages, I would probably say, is the number one for first time home buyers, just because you are able to put down less than 20%. Downfall is obviously that insurance premium is added to the mortgage, but you do get a rate promo. So often the rates are lower than, if you put down more than 20%, which seems backwards, but here we are. There are tons of other options. Obviously, there's just, regular conventional, which is putting down 20%. Benefit would be you can extend your amortization to 30 years. As we're with insured or insurable, it's only 25 years. So that is a benefit. And then you get into, a little bit more complex mortgages where it's like mortgage plus the home equity line of credit and stuff like that, where later on down the line, if you have a bunch of equity, that's an option as well. Yeah.
So what about getting, if you're a young couple, you don't have the down payment, is it still good that you can borrow from bank of mom and dad, things like that?
Yep. Yeah, you can always borrow what we call a gifted down payment, obviously, and that has to come from an immediate family member. It's pretty easy to confirm that. Essentially, they just deposit the funds into your account. We pull your bank statements, and the lender confirms with your parents via a letter and phone call. So it's pretty straightforward and pretty confirmable. So there's always options with that. When I don't know about Perry Sound, but in Muskoka, we have the grant, like a first-time homebuyers grant that often clients will ask about. I think I've maybe done 2 or 3 of them. So that's an option as well. And yeah, if you have really good credit, really good income and all that kind of stuff, there is also options for what we call a flex down, which is essentially when you can use a line of credit as a down payment. But those again are for like 800 beacons, excellent income. You have to qualify it. So
well, we'll segue over to that a little bit. What is something we talk about in our industry, you talk about your industry, beacon and credit scores.
Yes.
So what's the top credit score you can get?
900.
900.
I've seen 2 in 7 years.
Yeah.
Yeah.
Pretty difficult to get. What about if I'm coming in as a home buyer or cottage buyer and I'm looking and I've got a 550?
More than likely you'll be what we call an alternative buyer. So it wouldn't be with, say, a Scotia or a TD. It would be more on the alternative side of a slightly higher interest rate, but they allow for that bruised credit to come through with the knowledge that chances are in a year or 2 you're going to reestablish that credit and then transfer back over to the A space.
Yeah, I love those adjectives: bruised credit, sloppy credit. They're all negative. They're all negative. So what can you do if I'm somebody with a bad credit or bruised credit rating? What can I do in, say, a course of a year to improve that credit? If I'm coming in with a 500 or 550.
Don't spend money you don't have on credit cards, and pay the credit card down to at least 30%, if not the whole way. So 30% we find is kind of the sweet spot with the credit bureaus, where it doesn't negatively impact your credit. So when clients have a credit card or a line of credit sitting right at the limit, that's when we really see the scores drop. So try to keep that balance as low and payments on time. That's probably number one. And it's very, very important to at least pay your minimum payment. So I always tell clients, just please set that up as, automatic, so that it just comes out of your account. It's probably like 10, 15 bucks a month, but it makes a huge difference because it does stick on your credit for 7 years.
So you can improve that beacon score up like 100, 200 in the course of a year just by improving your credit history.
Yeah, I've seen clients who, have been around that 550, 600 beacon, who just had a bunch of debt, no missed payments or anything like that. We paid off the debt, and then the next time I pulled it, it was like high sevens. Yeah. So it makes a huge difference.
So it's a matter of behavior, basically.
Yeah. And another thing I will say that a lot of people don't know is when you do pay off those debts, don't close them. Keep them active. Use them, like I said, for gas or groceries or something like that, because the longevity of your trade lines and the the history behind it is really what thickens your credit. So you want trade lines for long periods of time, and they want to see that you can manage multiple. So at least have 2 on the go at all times, but never close anything unless you have, multiple other ones to take their place that have been active for quite a while.
Gotcha.
Yeah.
Okay, those are great tips. So what about your role in this? So you're a mortgage broker as opposed to going to a bank and speaking with a mortgage officer at RBC or CIBC. What's the advantage of working with a mortgage broker?
Firstly, I have to be licensed. So I took a course and I have to do continuing education each year. So that's the main difference between myself or somebody at the bank. Essentially, anyone can sell mortgages at the bank. And the second main point is that I can access, multiple lenders on all scales. So like we said, the A space, the alternative space, and then there's obviously private. So those are the main components. And then I do all the legwork. Like I shop around, I do, find you the best rate and find you the best option for the situation that you're in. And I never get paid until we've closed. So, and you don't pay me, the banks pay me. So I usually fight a little bit harder for deals because it's my livelihood. It's my, how I make money. So yeah, it's in my best interest that you get the best mortgage possible.
So then how would you be like going to an insurance broker, for example, who can find, 8 different providers for your policy as opposed to going to TD Insurance or pick on the cooperators, but the cooperators, they're only selling their product.
Yeah, exactly. And that's how I often explain it to people, is that it's exactly like insurance brokers.
Yeah. So, and you work different hours than banks do. I tell you that too.
Yes. And I do. And I pick up my phone, which I hear from a lot of clients that I've been getting a hold of my bank for like 3 weeks. I just can't get a hold of them. And so that's, and the convenience of it all too, and how our systems are set up. Oftentimes clients don't even have to come and see me. It's done, over the phone or email or whatnot. And I find that clients do really appreciate the flexibility because they can do it after they put their kids to bed or, on the weekend when they have the free minute. So it's all about convenience now, which I find has definitely progressed over the past 2-3 years as well. So
yeah, well, I don't know how many people. I go to my bank about once or twice a year.
Yeah. When I lose my card, that's when I have to go to the bank.
You need to order a new card.
Yeah, exactly.
So we talked a bit about down payments, and how do you have any kind of helpful tips for people how to save money? Again, this is not something that's taught to people. Like what are your tips to if you want to save money?
Start young, start early, and I think it just goes back to what we were saying earlier of just put it somewhere and forget about it and don't touch it. And a couple of extra points that I think aren't shined upon a whole lot are when you get that $1,000, $2,000 tax refund at the end of the year, put that in the account because that was money you weren't expecting anyways. And same with if you get $500 at Christmas, put that in there. any kind of extra cash that you get, it does add up. So it just, put any cash away, especially if that is your goal to own a house, and that should be, top priority. So, and just how I saved for my first house was I just put it somewhere where I can't see it. It's almost like a bill payment, and it came out of my account and then it was gone. And I didn't have, an app on my phone that I could like move it around and check on it. I just sent it away and it just sat there till I was ready. Because I think that's what happens a lot is people, oh, I want that pair of shoes, or, oh, I want to go on vacation, and they pull it from their savings because they see it there all the time. And it just seems like a pile of cash they just have when in fact they need it for something pretty major in their life.
Yeah, and there's things like, I know people can borrow off RSPs,
Yeah.
which may or may not be, depending on your life, a good choice. There's TFSAs you can put them in too as well. And it's a little trickier now with the higher inflation, because I can tell you right now, I've got a RBC high interest savings account that pays less than a point.
Yeah.
On larger than average, 10,000 plus deposits. So you're not really getting a lot of money right now. You're if you look at it that way. So
it's more about saving it, I would say.
It's getting into the habit of being a saver as opposed to a spender. It's much more fun to spend.
Yeah, exactly. And I would say like you said, like tax-free savings account and RSPs are probably the two main ones that I think are beneficial for first-time home buyers. Obviously, the downfall for RSPs is you have to pay it back. I mean, given it is over 15 years, but it still is an expense you have to pay over, a course of time. And another thing I would say is just pick one and then that be it. Because I've had, first-time home buyers that have given me 7 different accounts because they have some money here and some money there and some money there. And it just makes a lot of work for you and it makes a lot of work for me. And it's just easier to just keep it in one place.
Because then you have accounts all over the place. So.
All over the place, and just don't transfer between everything, because we have to follow that money trail. So if you put $5,000 over here, I have to find out where that came from and that came from. It's just not fun.
So if you're looking to buy a house or a cottage, how important is it for buyers to get a pre-approval?
Very, very. I would say that should be stop number 1 before they even call you, because, you and I both know people have called you and you've been shopping around, and then you send them to me and I say, sorry, Jim, you can't even, get them qualified for what you're looking at. So it's better to know what you're going for before you go for it. So, shop within your budget is very important for not only you, the realtor, for finding the right house, but for the buyers to have, a set expectation going in, because it could be drastically different between the price range that they want and what they can afford.
What about if I had gotten a pre-approval last May? Is that still good?
I would say if you got a pre-approval last month, you should probably keep checking in, because it does change quite a bit with the rates and everything like that. So.
And I say that kind of in jest, because we have had people, we got it in April, nothing's changed. It's like,
everything's changed.
Everything's changed. No, you gotta go redo it. Yeah.
I used to have to qualify people at like 5.25. That's what I've been using for the past, pre-2022 for 2 years. And now, depending on the range that they're in, I'm qualifying people at anywhere from like 6.99 to like 8. So it's a massive difference and really impacts what you can afford.
Yeah. So if you come in and then you say you do a pre-approval, I find the client's a house, or some other person finds the client's a house. It's kind of the next process once they come in, because we've gone back to offers from being all basically unconditional to having conditions or contingencies in the offer for financing and things like that. So what are you looking for people to kind of get the mortgage application started?
So we really tried to simplify our process throughout COVID. And I think it's really streamlined everything, because we can get the pre-approvals done really quickly if people are prepared. So oftentimes it either starts with an email or a phone call where they call me and say, hey, I need a mortgage. And then, I pick their brain a little bit, chat with them about what they're looking to do, any questions they have. And then from there, I'll build a document list in my head of, okay, you're, employed, so you need your T4s, I need a pay stub, I need a job letter, etc. Then I send a online application, which they can fill out, a credit consent online, so they just sign it right on their phone, and then a list of documents that I'll need. Now, the list of documents depends on everybody's situation, but it's a pretty standardized list, I would say. And then as soon as they send in the application, the consent, and their documents, I can take a look at it within, half a day, not even, sometimes an hour. And we have a phone call and chat about numbers and interest rates and payments and all that fun stuff that people want to know about. And then, it's a pretty smooth process. I think we've got it down pat now.
You can get it done within about a week?
Oh, gosh, yeah.
Yeah.
For me personally, for me to run my numbers, and since I collect all documents up front, I'm usually pretty confident in my numbers. Like I said, I could get done in half a day. But if you're looking for a certificate from a lender, which oftentimes I do now, you're probably looking at, 24 to 48 hours, depending on the lender.
Wow, that's pretty quick. Now,
For a
are you
pre-approval.
still for a pre-approval? Yeah,
Yeah.
but as far as the
Yeah.
complete approval, are they still getting appraisers coming in to look at the property?
So it's hard because there hasn't been a whole lot of purchases this year when that influx has changed from, the crazy house prices to kind of the mellowing a little bit. So it'll be interesting to see how the rest of the year goes in terms of that. My guess is probably yes, because the values aren't going to be there the same way they have been in previous years. But what they usually do is they'll run an internal evaluation on the property on whatever lender system they have. And if the value doesn't come back in, that's when they send an appraiser out. So oftentimes with insured approvals, they won't send an appraiser out. But if you're looking to do like a refinance or something along that nature, chances are you'll need an appraisal.
Yeah, and I know I was talking to one of the appraisers yesterday in the Parry Sound area here, and they're certainly not as busy as they were.
No. And I think that's just due to the lack of movement. I think everyone was kind of at a standstill, we're scared moment, the later part of last year and the beginning part of this year, just because they didn't know what was going on with rates, and there's a lot of scary things in the news. So I think now things have started to calm down. Bank of Canada announced that, they're more than likely going to hold with their next meeting. So that's good news. So I think things are going to start to pick up again, but it's definitely been interesting.
Yeah,
Lots of scared people.
Yeah, and it is, and it's like we're still looking at, if you look at the 50-year kind of trend line of mortgages, we're still a couple points below that. It's just, the 1.8% mortgages was not going to last forever. That was kind of a result of COVID and all the, the economic stuff and the liquidity that was put into the markets, and people were afraid of things. So they just took mortgages basically down to zero. I think the prime rate was down below zero at one point. And and it's just, but that's not normal. And the biggest problem that we have over here with our market, I'm not sure if it's the same over where you are in Huntsville, but we have no inventory.
Mm-hmm. We're definitely starting to pick up on that. I follow a lot of realtors, Instagrams and stuff, because that's the best place to get new listing information. So I've seen a lot in the past few weeks, a lot of new inventory, because I do feel like as soon as the sun starts to shine and, people want to get outside again, I do find that spring market tends to hit. So we're starting to see that over here in Huntsville a little bit.
Yeah, the phone's starting to ring a little bit more here, but it's still pretty sleepy.
Yeah.
So we'll see. And we've got we got lots of buyers.
Yeah.
And we're just be patient for the inventories, the levels to start to climb back up.
Yeah, exactly. And that's what I'm telling my clients as well. And same with interest rates too. Like you mentioned, like they weren't going to stay at 1.8 forever. And I don't believe they're going to stay where they are even for this year. I do think they'll probably start to creep back down, obviously not to what they were, but somewhere, within the realm of normality.
So is that belief, and I tend to agree with you on that, are you giving different advice to people getting mortgages now, maybe shorter terms on the mortgage?
Yeah, we're doing a lot of like 2-year, 3-year terms,
Yeah,
depending on what they're thinking. Yeah,
because the cheapest mortgage I think right now is the 5-year fix, is it not?
of course. Yeah. I would say for about 2 weeks it was the 3-year, and then I think lenders started to pick up on the fact that like brokers and everyone was throwing out that 3-year, so they obviously upped that. So that's, yeah, but it's still the insured 5-year fix.
Yeah. Well,
Yeah.
it's gonna be an interesting year. We'll probably
Yeah.
have you back towards at some point in the year to kind of do the forensics of what happened with 2023. It's always interesting once you get through the season to kind of see what
Yeah.
actually took place. You're too busy when things are busy to do it. What
Yeah.
about alternative mortgage products? Like, the one that comes to my mind, because we deal with a lot of seniors, and some things that they bring up to us, like what about reverse mortgages, things like that. Could you kind of give your opinion, maybe explain what a reverse mortgage is?
Yeah, for sure. I would say like the biggest pro for retirees for reverse mortgage is no payments. So you get, an influx of cash, but you don't have to pay it back. And you get to stay in your house because oftentimes, they're running out of cash. There's bills associated with owning a home, and they're on a fixed income. There's no way of, catching up. So those are the two pros, I would say. And then the cons are really just the interest accumulates on a mortgage that you're not making payments on. So it does chew into your equity that is, repayable upon two options. Either you sell your house or you're no longer with us. So those are the two ways out of them. Or pay it off, obviously, but the interest does accumulate, which I have heard from clients that it does, chew into more of the equity than you originally took out.
Alternatively, could if you're a senior couple, or often what happens is one of the couples, and this happens a lot, is one of the couples die unexpectedly.
Yeah.
And then they go from 100% income, whatever they're getting from CPP, OAC, things like that, and then one spouse dies, and then they're getting 40%. Because maybe one of the spouses didn't work and they're not getting the amount of CPP.
Yeah.
And they're looking at different things. And what sometimes we say is like, you can look at annuities, you can look at just lines of credit on your house and draw from that as need be.
In that situation, I would probably recommend a reverse, because strictly because of the no payments. So if you put a line of credit on your home, you're still responsible for the interest only payments, which, depending on how big your line of credit is and how much you use it, could, get hefty, especially with the way rates are at right now. So it really just depends on the client's situation on whether I recommend a reverse mortgage or not. It makes sense for some people, it doesn't for others. So like you said, it's a very niche market, and it's, I really like to do my research on the client before I place them in that, because I don't ever want anyone to feel cheated out of the equity that could have been there within their, estate or something like that. So I like to make them aware of what it entails. But it's definitely a great option for that situation.
Are the rates comparable to mortgage rates? Are they higher or lower?
They're higher. Yeah. They're often, I would say, like 2 points higher. So you're probably looking at around like the 7-8% kind of thing. Yeah.
And it depends on how much money you're drawing out of the reverse mortgage too, how much mortgage interest is going to be accruing on that.
Exactly. Yeah.
And the value of the house.
Yeah. And it often, the amount you can draw often correlates with how old you are as well. So the older you are, the more money you can get. The younger you are, the less money you can get.
Yeah, because old people are not going to live longer than young people in theory.
I mean, I wasn't going to say it, but yes, you're right.
We'll blame the actuaries with that. Yeah. They're the ones that come up with these wonderful numbers and that.
Yeah.
What about, we're going to wrap up in a second here. What's the best advice you can give people if you're looking to buy a house in 2023 as a buyer?
Get a pre-approval, have all of your documents saved, ready to go, and just keep it simple. One bank account, keep your documents readily available, and just, be prepared, because I do think things are going to happen quickly. Like, you're not getting those multiple bids, but things are still moving fairly quickly, especially in certain price ranges. So have your pre-approval documents and down payment ready, so that it's an easy process where you're not stressed out.
And it makes life a heck of a lot easier for us if we can have a short contingency on financing as opposed to a 2-week.
Exactly. And I just know I've had those buyers that have, done those 2-week conditions, and those 2 weeks feel like 2 years for them. And it's just a lot of unnecessary stress that can just be set aside with just a little bit of organization. Just have everything ready to go. Ask me what I need, and I'll tell you exactly a list. You can just keep it in a folder in your computer and just have it ready to go. So
just put it on your Google Drive or whatever and ship it all over. And it's easy to do. Like, it's just all you need is a scan or go to work, scan the documents, and you have them all ready. And it just makes everybody's life much simpler. And it's going to be a competitive market this year because of inventory levels. So having your pre-approvals is going to be maybe the matter of getting the house or not getting the house.
Yeah. And oftentimes, like, I know when I send you, or like you send me a client and then I pre-approve them and send them back to you, I often get them to call me when they've seen a house with you that they're planning to put an offer in on. So before you do up all the paperwork, I double check the taxes. We do a double check. Basically, we go through everything again, just so that, there's nothing weird with the listing. There's no, water in the basement or just weird things with the listing that might pop up. So that we do know it going in, that we're pretty confident on, the approval.
Yeah, well, it just, and we work back and forth with things like that too, because it just makes the processes go much quicker when the agent and the mortgage people can talk to each other.
And when you work together instead of, against each other, it just makes life so much easier, just because send me the listing, I see something funny, we deal with it. It's just, it's a nice thing we've got going on.
Yeah, it works, and it works for our clients, so that's the most important thing. How can people find you if they're interested in your services?
They can Google me, SamanthaGarrod.com, or they can call me or text me.
And we'll put your number and a link to your website with Mortgage Intelligence on the show notes with this.
Mortgage Center.
Mortgage Center. My apologies. That's another company. They're all they all have mortgage in them, so
they all have mortgage in the name. Yeah,
it's like real estate. They're all real estate or realty. So, anyways, the Mortgage Center. So we'll put those in if you want to get in touch with us. Samantha, thank you very much for coming in this morning and having a chat. And so we'll probably do this again at some point during the year. We're starting to get some listeners out there. You can actually find us on either YouTube. You can find us actually now through Spotify, Google Podcasts, and on and Apple Podcasts. They're all there.
Oh, awesome.
You put the Cottage Country Insider, you subscribe to it, leave comments now that we have a bit of a listenership, and we'll be back probably within the next week with our next client. Thank you, or our next interviewee. Thank you very much. You have a wonderful day.
Thanks, Jim. You too. See you later.
Bye-bye.